With stock markets crashing, plenty of great ASX stocks are becoming huge bargain buying opportunities. But which ones will bounce and which ones will fail? We cover all that and more and give you 10 ASX stocks that could be the best bargain turnaround stories of the year. As the brains trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets, we'll show you the professional stock market playbook that actually works. I'm Philip Tortevsky, joined by senior analysts Janine Cox and Pedro Banales, and we are Wealth Within. Good evening.
Good evening. How are you?
Very good. In interesting times again.
Look out for these stocks that we've got on the list, especially there's one of them that's one of my favourites that I'm looking forward to talking about tonight. Yeah,
it's definitely a bargain type opportunity right now, but I want to bring in Pedro. Pedro, how are you going, mate?
Yeah, doing very good, Phil. Looking forward to seeing some good stocks which are providing some good second chance opportunities tonight.
Yeah, fantastic. All right, well, let's dive right in now. The All Ords is down around 10% now, and some big stocks have been hammered. So what's the biggest thing you're seeing right now in terms of what's driving our market down, and does it make a great, as we mentioned, bargain buying opportunity, Janine?
Yeah, well, we know that the market had pushed through it to its all-time high. We know that materials were driving that run.
Yeah.
We'd seen the banks pushing it forward. Banks have been running on for some time. The whole war and turmoil in the Middle East is obviously having an impact right now. There's a shift by the fund managers out of some of the cyclical stocks, and materials is taking a bit of a hit at the moment. Gold's taken a hit, so we're seeing those precious metal stocks come off. We're going to be talking about all of that and more, so I'm really looking forward to that.
Yeah, fantastic. All right, now we're seeing certain sectors, as Janine mentioned, thrive, like energy right now in particular, but materials, which was a stellar performer, got dumped. But is energy the sector revival that is happening right now a short-term play linked to the war only, or has it just woken up from a big slump for longer-term gains? Pedro, I'm going to go to you on this one, mate, because you've been covering this energy sector, because there is this train of thought out there now that, you know, once or if, when the war ends, the energy story will be done. Are you seeing a prolonged bull run for this energy sector, or is this time to, I guess, think short-term?
Yeah, well, the energy sector always looked primed to take off. We were just waiting for a catalyst, and this was actually it. Unfortunately, it had to take a war for the sector to wake up. And I suspect that it's going to be a knee-jerk reaction in the short term. We could see some short-term pullbacks once this does get resolved. But long-term, I think that this sector will provide strong returns, and it's going to be an energy story for the next 10 years, as I've always been saying. And it doesn't necessarily have to be oil. It's really the gas that's in the spotlight for me at this stage, and possibly with some short-term coal exposure, Janine, which has been waking up recently due to the oil shortages.
Yeah, fantastic. All right, well, let's get into those stocks. Janine, what have we got?
All right, I was just having a bit of a play there because I'm getting quite excited about these ones. You are probably too. So let's go and have a look at the charts. Right, the first one we've got, of course, is BHP, okay? So the materials are a cyclical sector that's been hit quite hard, and we've seen BHP get sold off. Now, I don't think it's the end for BHP at all. It's just a huge amount of volatility we're seeing right now. It could flip to the other side, but of course, you wouldn't want to be trying to catch a falling knife. It's just about being patient and waiting for that next opportunity that's around the corner. But it's come all the way back into that huge sideways move that it existed there for quite a few years. And when we see these big sideways moves, we often expect that stocks, when they break out, will come back and test that support before taking off again. So it's just come back to the angle of the trend, really, and we can see that it accelerated away quite hard, but it's more or less coming back to that angle. So, you know, I'm not too concerned about it. If you're a long-term investor holding it, that's fine, but hopefully we see BHP, there's some sense in the market, and BHP turns around and moves back up again, which is what I'm expecting.
Yeah, it's so interesting. I mean, when you analyse it like that, you know, even before all of this that unfolded geopolitically, the way BHP was running, you know, and I've spoken to you off air about this, you know, you're seeing that stocks generally follow these patterns and rhyme, and the pullback is often the better opportunity. So, yeah, that's definitely one to watch.
Yeah, I guess it depends on your risk appetite and where you enter, but at the moment there's no entry. It's just a matter of being patient now, waiting for that next one if you're not already in BHP. Now, we've got an interesting fact to talk about, because if we're looking at some of the material stocks and we see one of them that actually performs differently to BHP, that could be another area to keep an eye on as well.
Yeah, all right. And I think we've got one or two of those coming up. But let's move to the next stock, Pedro, ANZ.
ANZ, our second biggest bank, this is one that I'm pretty excited about and looking at it closely. I think that it's provided a nice little second chance to get in. And I'll go into the monthly chart here and have a look at what's happened. It's recently broke out of to a new all-time high in February 2026. And usually what stocks do is they do have a little bit of a breather once they do break above that new all-time high. It took ANZ actually from 2007 to 2015, so just above 7 years to break above a new all-time high. And it did that again, similarly to 2026, but it took much longer. It took 11 years. So now it's finally broken out. We can see that it is consolidating sideways. It's staying above that $35. It does make these type of moves, though. You can see that here in 2021, it had that consolidation. It was actually more of a correction, I would say. Then it consolidated sideways to 2023. Then 2024 again consolidated sideways. So we could be seeing that similar move start to happen now. What I like about it is that it's healthy. It's got a 18 PE ratio, so that's below 20, which is quite nice. Dividend yield around that 4%, 4-5%, which is also nice along the way. And going back to the technicals, it looks like it's doing some type of move like it did back here. And you can see by the action that it does when it reaches that level there, then has a pullback and then trades back up and then comes back down. So it's done something similar in the sense that it's come up, it's come back down, it's made a new high, and now it's consolidated. So we could see another move to the upside, possibly up until that $40 in the short term. And we're still yet to see whether it just consolidates sideways or if it breaks above that $40, in which case I think that it's quite a bullish move for ANZ if it does. And we could see moves up to that 46 or even up to that $50 level in the long term, I would say.
I mean, it's an interesting play, the banks and ANZ. I know you've spoken about the banks mentioning, okay, we're in this rising rate environment. Now we talk about the US. They're pulling back on the rate cut idea, also thinking that let's hold. I think their last rate decision was a hold when most predicted a cut. You've got the UK saying similar things. I mean, speak a little bit to what you think of the financials, because you've mentioned in the past they could work out pretty well in this environment.
Yeah, well, we see in these prior runs, prior to major tops, that there is a period where there's a bit of a lull and a lot of stocks will come back during that time. We saw that in 2005 and then the market took off after that. So we could be seeing a very similar sort of thing, and a bullish move into 2027 is what I'm expecting.
Yeah, fantastic. All right, now if you want the skills to analyse stocks just like you're seeing right now, check this book out. It's How to Beat the Managed Funds by 20%. It's free, you just have to pay the shipping. The link is in the description in this video. As I always say, if you want to take things to the next level, go and check out the website. Visit the Diploma of Share Trading and Investment. It is government accredited. You won't find another one like it. And it is on our website, as mentioned. Go and check out the testimonials as well. You'll see a lot of the stories of our clients that they're having, which is amazing. But next stock, I think we're going back to the material space.
Yes, and Alcoa Corp's
aluminium.
Interesting one, alumina. And we can see there it's had an incredible rise. Now, look, if we look back over the history of this, obviously it's coming back into a bit of a sideways consolidation at the moment. But once it actually finds a bottom, we need to wait for that and then turns around and moves back up. This could be a really interesting one to take a look at. We'll just go to the weekly chart so we can just see the nature of that pullback that we've been watching. And this is an orderly, even though it looks like it's the sell-off is accelerating, it's orderly at the moment. The way that it's unfolding, we've got a gap there on the weekly, so quite calm about that pullback. It could be anywhere, the pullback from here could be anywhere from 5% to 15% at the worst case scenario to come back to the angle of that trend. If it came back the full 15%, that would be really interesting, because then you've got a lot more upside. I guess it's interesting if you're not holding it, isn't it?
Yeah.
44% then to the upside. If it pulls back now, we could be seeing what is known as a little pattern unfolding, and it's more of a consolidation that's happening right now if that's the case. So it's really about wait and see and watch how the stock actually unfolds, because if this sort of pattern unfolds and it does find support somewhere around that, 75, 70, probably closer down here, 70, maybe 5, and then breaks out of the top of that, it could go gangbusters from there. So it's a wait and see right now, but something definitely to keep on the watch list.
Yeah, all right. Let's get to the next stock, Sonic Healthcare. Pedro, healthcare.
Yes, Sonic, it is. Yeah, so we're going to healthcare. It's been an unloved sector for a few years now. We're still waiting for that one to wake up. And Sonic Healthcare, unfortunately, has not been very much loved either. And this is one that it's definitely good to put on the watch list, but it's just not ready yet, especially since it's broken below this low here on the monthly of that $20.50. It's now pointing to the downside, and it looks like a continuation of that downtrend. So possibly not quite yet, but definitely want to keep on the watch list, just because as well, you can just put a bit of a momentum there and wait for it to break above. And this could be one that does provide multiple returns over a long time frame, because you can see that once it does break into trend, it did all the way from 2010 to 2022. For 12 years, it was in a nice trend. So once it does get into trend, it'll provide some nice returns, but just not yet. In terms of levels, it does look like it's heading down to possibly this level here around that $17.50. If you want to round it off to that $17, then you can just say it's just round it to that level there, that low, which was a previous significant low back in 2015, and it was a previous all-time high as well. So that's going to provide a strong base for this stock. It could be heading down this for a nice little bounce, and it could have a nice short-term trade. And then possibly if it does break above that momentum, then you could see a prolonged uptrend, because this one is definitely due. The fundamentals are not lining up with the technicals. It's got 17 for a PE ratio, and it's got a 5.5% dividend yield. So a nice, good, consistent yield. It's a profitable company. Sonic Healthcare, everybody knows it. So that this is why it's so important as well, for all those value investors. And it's good to look at for value in companies, but it's also very much important to look at the technicals, because fundamentally this stock, like I said, looks great, but technically it looks quite horrible, to put it bluntly. So I would wait for also a bit of a break above that $21, as it's provided support and resistance in the past. So I would say that that's a range there for Sonic, $21 to $17. Watch what happens around that range and wait for a reversal back up.
Yeah, it's such an interesting point. I want to get your thoughts, Janine, on what Pedro said, because right now, I mean, and I'm seeing it with some of the people emailing in or commenting in, and also some outside talk about. We've got this situation going on around the world. Some have been saying, even with gold, I've held gold, I've had a gold ETF, I've held it all the way up. Now my position's been destroyed in 2-3 weeks. And I'm not thinking about selling, but I'm buying into this, the story of gold should be going up to some degree. How much importance are you placing, when you're looking at what's happening around the world right now relative to how you do things in terms of what price action is telling you? Because there'd be those people out there that are saying, I'm not getting involved in this market at all, I'm just selling everything right now, but that may not be the right thing to do. So maybe speak a little bit to that, because I am seeing a lot of talk around there.
Look, when there's all that uncertainty, it definitely increases volatility, which can increase risk.
Yeah.
So that's the big thing. So that's the first thing to think about when you're looking to invest. If you haven't bought shares yet and you're looking to do that, then really stocks like Sonic, when they're coming down to long-term lows, if they provide good entries, could be an opportunity. I agree with Pedro that sort of around $15, $17 could be an important level for this stock going forward. So there's no rush. I mean, it may hit the angle of this line and reverse and turn around and go back up, and people will be sitting there saying, oh, but Pedro and Janine said it's going to go to between 15 and 17, I should wait. Well, that's not necessarily the case, and is why you have to have good rules and back yourself in that situation.
Yeah.
And look, just a simple trend line on a monthly chart could be the answer, and that's where that book is so simple. And look, over the years, we can add things to complicate it, but sometimes the most simple can be the best.
Oh yeah, simple and key. I think it's not just about applying or drawing some lines. You can draw a million lines on the chart, but have you got the key one? And if all you did was 3 or 4 and you've got the key levels and you know what you're looking for, and obviously the confirmation, as you're saying, I mean, it doesn't need to be more complex than that. But
well, that's why I like those trend lines, because it can give you a medium to long-term view on things rather than a more shorter-term perspective, which is what some of what do you call it, moving averages and things like that can trap people into those shorter term moves at times. So that's one for the trend line, definitely. But if we go back to the Sonic chart just for a moment, and just back to Pedro's point, if we see the stock really below this level for a couple of months, then I would say, look, there's a higher potential for it to go back to those levels we were just talking about. Yeah,
and if you do want to identify how to draw trend lines correctly and do the real significant ones, I mean, there are rules around it that we do teach in the course and the diploma. So please, I always say, don't get confused into thinking that just what we've drawn here is exactly what we're doing.
I mean, we've shown some stocks that you get these long-term trend lines on them when they're making lows, and then they turn around and they provide some significant upside. So, it's worth waiting for, isn't it?
Yeah, for sure. All right, let's get to the next one.
All right, let's look at the next one. It's Capstone Copper Corp. I mean, this one has been absolutely smashed, hasn't it, in the last 2 months?
Oh, yeah.
And it's worn the brunt of it. Now, I haven't seen the news reports about this one. Did you guys talk about this one in your market report yesterday?
You know what? We cover so many, not this one yesterday, but we do cover so many stocks. This may have been one we've looked at. I doubt it, but...
But you do cover these copper stocks at times.
Yeah, so. We did a show a few months ago about copper, I think at the end of December. And because copper right now is such an interesting metal that they're talking about, especially given the digitisation of the world and the importance or how much it will be required with things moving forward. So,
well, all of these sell-offs, they just create opportunities, don't they?
Took the words out of my mouth.
Yeah, because we're watching stocks making new all-time highs and continuing to go up and up and thinking, okay, they're climbing a wall of worry. Where's the top going to be? Like gold, we thought it was close, and you guys talked about it on the Monday report. And look what happened to gold. Now, this is copper, and copper is being pushed into the same basket. And look at this stock. Now, you'd have to look at the news reports to find out what's going on with this, but if we take a look at the weekly chart just to see where we could see some support coming in, it could be pretty much now. Just looking at where that prior consolidations have occurred, we can see that it's coming close to that. It's gapped down. Sometimes that can mean an exhaustion space, particularly if the bar is small, like it is so far, but then it's only Tuesday at the moment. If the range stays small, that could be a good sign. I just keep an eye on where it closes and then what it does the week after that. But obviously you need to wait for a proper entry signal, and it's going to be a few weeks away, but could be another good one to keep an eye on.
Yeah, and I think what's also important, I mean, when I'm looking at that is the way these stocks are falling. Not many people talk about that. It's like there is a method in the way things are falling to determine what comes next, because when you look at that, no green, literally straight down. When you talk about, euphoria on the way up, it looks completely opposite to that, which generally signals the end. And we've seen during COVID, we've seen many times in history where there's the absence of buyers only selling, generally markets turn back pretty quick and they provide some good opportunities. This maybe might fall in that basket.
It might fall in that basket too. I mean, we also have our theory about how stocks unfold over the big picture and long term. And depending on where this is in its overall move, it could be that it's making that first move and we're going to see another move through that high, or at least to test that high. So I can definitely see there's a pattern unfolding on the way up. We just haven't seen the finish of the move back down. But once we could even see a bounce, close to these sort of levels. And then once we get that bounce, then we know that it's on its way again. So there's lots of signs. And we talk about those in our course because it's not just about having a good set of rules. Yeah. It's also about letting each bar unfold, and then that builds the picture in terms of the overall pattern and where the stock could be, and why some of our students are finding that so valuable when they're doing their analysis.
Yeah, following the market. All right, well, that wraps up our first round. We have some more amazing stocks coming shortly, but now is the time for our trending topic, Janine.
All right, yes, well, is Trump bluffing? Who knows? What we do know is gold is finally making the move we've been waiting for. The gold price fell more than 20% from its high, in fact closer to 26, I think, to the bottom, which spooked investors and has institutions rubbing their hands. We will get into an opportunity in that space shortly. And Trump, well, One minute we hear Trump threatening to blow up power plants, and the next he's calling a ceasefire. The rhetoric is confusing, but what's not confusing is the opportunity. If you haven't seen our Monday market report this week, make sure you check it out in the next 24 hours, as you'll find more on gold opportunities there. By the way, we loved your comments, and you're right. The recent fall in the gold price is likely to be aided by countries selling gold to shore up their own defences. So well done in pointing that out. We really do appreciate all your comments. Now, who sold the most gold isn't important. What is important are the opportunities in the gold space in the sell-off. We've talked about the gold rush in Victoria and New South Wales. Now, this article states junior miners are moving over old ground in the hunt for the next big discovery. There are large areas still unexplored and ground that earlier explorers have missed. It also mentions it's important to look for stocks with discovery potential and major company interest, which could lead to a joint venture or takeover. So the moral of that is always do your own research. Let's take a look at the charts. Now, on the screen there, you can see the gold price, which we first should, respectfully to the gold price, talk about how far it's actually gone. 170% to that high is what gold did. Now it's come back in a crashing fashion. We don't call a move like this on gold as a crash just yet, because it's not over a very long time frame. If it was actually to go down in a protracted move, then I'd say that we're into a more significant decline as a result of this. Could we see it go below 4,000 points? The answer is yes. It's possible, but at the moment it looks like it's finding support around that level, and markets like whole numbers a lot of the time. It stopped here close to 5,600 points. There's no coincidence there. It actually found support around this level here, and that was about 3,500 points. It topped out here. So there are some interesting levels on the gold price when you know how to break it down and look at that. And I had someone I was working with recently who was doing some analysis on the gold price, and just some of the interesting things that you can find on that gold price can help you work out how far the gold price has got to go to the upside and the downside, which is so important because most people are just looking at the short-term volatility when they're trying to make a decision. Yeah. And that's really going to catch you out, especially in this market. So looking at what gold could do next, I can see the angle of the trend coming up under these, or through these lows and highs here. We can see it's not far to go before it hits that, but also there's a sideways move here that actually hasn't been retested, and it's possible as a worst case scenario that we could see the gold price fall through there. But at the moment, I'm just thinking that the angle of that trend could actually hold it up as part of this run. So let's watch this space. But to me, this is actually starting to look really exciting now that it's come off that top. And look, when I was reading that article from Stockhead, they talked about a number of opportunities in New South Wales, which I thought was interesting with these smaller stocks. So if you are the type of investor that's looking to do research into this area, it is absolutely crucial that you have the technical analysis worked out, that you understand what your strategy is, can write the trading plan for it. It's not just a matter of thinking, oh, someone's written an article about a stock and then I'm going to buy some because of that. It's matching up what the price is telling you with what the information is also saying about it. So if we go to the stock that I've got here, this is actually a stock that they talked about. Now, we can see there that it's actually turned down from a really important level. We know gold's being sold off. We know that some of these gold stocks were really starting to get a move up from their lows. This is actually a really nice little run up. We could see that there was some resistance there historically. It's quite clear that resistance exists around some of these levels here, and it's just doing what we see as natural. It's just turning back from that level. So, which is a good thing, because if you weren't in it yet, it means that it's actually proving again the strength of that level. So once it goes through it, then you can tick another box. It's really about that trading plan. And one of the reasons I chose this one is because it's actually testing the dollar mark. And I think that that's a really key thing for investors to look at and traders to look out for. Doesn't matter which one you are, which hat you wear. It's so important to get these levels right, because a move down on a stock like this can be far more significant than what the gold price is going to experience. You can see that that prior fall there was nearly 45% just for that 1 week, 1 month down. And this month we're already seeing nearly 40%, and it could come back a bit further as part of testing that, possibly even 50. Which means that, the setup is going to be important now, waiting for that next setup to unfold and to get through. And it could break through this level and just absolutely shoot off to a new high. It could find resistance again, just around that dollar, maybe up to $1.20. But it's a matter of having a good plan, and once you know how these stocks move, then you'll be set. You'll be confident in what you're doing, and that's probably, if you think about anything, the most important thing, that people can go into this with confidence, knowing that they've got a parachute, if you like, that they're not free falling out of a plane with no protection at all.
Yeah, very well said. And also the confidence in knowing in these times what is a pullback and what's not. When do you get involved? I think
exactly.
That's so important. Good advice. All right, now if you want the skills to analyse stocks just like you've seen tonight, visit our website wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Pedro, hopefully you haven't fallen asleep there, mate. What do you got?
Next stock is CLW, Charter Hall Long Whale REIT. Now, don't get it mistaken. This is not a fishing company or a marine company, nothing to do with whales. It's a REIT, Real Estate Investment Trust. So excuse the dad jokes there. I am a new dad, so still getting used to them. So Long Whale basically just means that they invest in property that they lease out for a very long time. So they've got a very low vacancy rate. And these guys are actually leasing out to government agencies and good blue chip companies. So that's one thing that I like about it. Another thing that I like is the P ratio is at 11. The dividend yield is at 7%. So both good fundamentals. Now, again, we look at the fundamentals that tells us what to buy, but we're still waiting for the confirmation on the chart. But I tell you, it is almost there, because it's there's a pattern, first of all, that I should talk about. This long-term pattern that's unfolding here on the chart that's quite interesting. And for those doing the diploma or that have finished the diploma and that are used to trading and are doing well in their trading, I highly recommend checking out the advanced diploma, because there's a pattern module in there that really outlines these longer term patterns. Obviously, I can't get into it now. It'll take too long. But there's a structure here that has unfolded that tells us with a high degree of probability that the next move is likely to be this and in that direction. So this stock could actually trade in the short to medium term, I would say up to around that $4.40 first. And then I would say around that $5.20 would be the next kind of target. But of course, it's still falling. So the thing to determine now is the support. We can already see that it IPO'd back here in 2016, and it has fallen below that level. But have a look at the significance of that level. In 2020, it found support during COVID right on that $3.50. It broke below it then in 2023. It traded around it in 2024. Again, found support in April 2025, and now it's broken below it. One thing that I'm not too happy about is that it has broken this long-term momentum that it established. So it is below that momentum. That's a little bit bearish, and it has broken below that low that I mentioned that was quite significant. But I think it's getting into the oversold territory. I think that it's quite possible that it does find some support around that $3.20. But again, we'd have to have a look at some further confirmation, and definitely look at the weekly chart. Go to those lower time frames, because they're going to be the earliest ones that will give you a sign of a turnaround. And we can already see what's happening here on the weekly chart. We've got higher volume. We've got a reversal bar happening. It's open low, it's closing high. I think that this one is in the early days of a reversal, and I'm telling you that this is the time to be looking at it. So lastly, you just you could have a little bit of a momentum line there and wait to break above it. But I think that this is one to watch for a move very, very soon.
Yeah, fantastic. All right, that was quite in depth. Let's get to the next one.
Yes. All right, now we have Newmont, which is one that a lot of people are interested in. So we've seen Newmont Corporation pull back quite significantly. Now, just looking at the fall that we've seen to the low, it's around 32%, and it's still hovering around those levels, 30.8 at the moment. We can see that it's had two tops up there, which is interesting, and that often can signal that a stock's going to turn, but there are certain signals you need to be watching to confirm that. And looking at the way that it's unfolding, it may find support around this level, but I'm also looking at lower down. We could see this one fall anywhere between $100 and $110 as a possibility underneath the angle of that line. So this could be it trends beautifully. That's one of the big ticks that I think, you've got to look for in some of these stocks. It has a beautiful trend to it, and there are opportunities to buy through the trend if this is a stock on your watch list. But right now it's performing very differently to what it's done in the past. But note here, there was a big reversal, big sell-off that happened back here. This was in 2024, and you can see that the pullback at that time was around 32%. We're at the same sort of level now that we were back then. So that's why it's possible for it to find support around these levels at the moment. But if you were trading this one using trend lines, then you'd probably be out of it at this point, because it's traded well below those trend lines. But always wait for the confirmation of your rules, and our students know what they are and would be looking for them. They may have even been out of it. There was other rules potentially on that chart that could have got you out earlier. That's why it's important not just to have one rule. And I remember when I first started learning that this company was trying to tell me that you have one rule and that's what you use, and then you use some moving averages and you just get in and out using that one rule. Well, we know through doing analysis on lots and lots of stocks that that's not going to work. And the stock's personality can change over time, and you need to be able to move with that. And how do you do that if you don't have a proper structure behind you? And that's really all it is. And in speaking to people who are short-term traders as well, they actually would stop trading at a certain point in the year. They don't have to trade all the time, and that comes with maturity. But then they didn't have any structure behind them to make sure they had a proper plan and a proper process. And so I've had traders come through and work with me that needed that trading plan. And I think that's another big thing. People who are experienced think that they don't need it, but that's actually often not the case, and these sort of pullbacks can often show that.
Yeah, and I think also what's important, because you touched on it just a second ago, is that, for me, even over the last 20 years, looking at this stuff, price leads news. Whichever way you want to break it, that's the thing that is really true in the market, in that it explains why you often see stocks going up for no reason, and then you see the news come out, or doing the opposite. And we've seen it with oil, we've seen it with gold, we've seen it with some of the tech stocks as well. It truly is the marker to let you know things are about to do something before mainstream or news or fundamentals will lead you on to that. So another good example in why potentially selling a few weeks ago on some of these gold players was there. Whether you took them or not, that's another thing. But let's get to our next stock, which is CPU. Now, I got Janine on the previous one. Let's go to you, Pedro. CPU, mate.
CPU computer shares. So this is just a registry for shares on the ASX where the shares are held or registered. Let's have a look at the chart, because this is looking interesting. It's getting to a very important level here around that $26, where it provided multiple times resistance, and it traded around that level. One thing that it has done, though, it has broken below the $29, $28 mark. It's still holding around that. So I would say that if it doesn't reverse from here, then it could trade down to that $26. And in failing that $26, we could be seeing a move possibly down to that $23. But you would think that with more activity on the market and more, this company really relies on more IPOs on the market, more companies coming onto the market. That's where they'll make more money. So if we're seeing it relies on the business cycle, basically. So if we're seeing more companies list, which unfortunately we're not, then this will benefit. But technically, if we're just looking at this technically, it's been falling for a long amount of time. The fall came in August 2025, and it's just been falling ever since. And it actually marks the longest and sharpest fall in its history of basically since 2000, and that was that big kind of dot-com crash around there. And it did have a similar fall in 2007, which was the GFC. But look how sharp it is. It just really shows you how volatile our market has become. So, just to put it simply, if it doesn't hold that $28, then $26 could be the next possible move. If not, then this one could be definitely primed for a reversal. But let's just put a quick momentum there on the chart, and it looks like it has broken that momentum, but we've got these other levels to help out. So quick look at the weekly chart. We're seeing a possible reversal there happening on the weekly, and you'll see a similar scenario with a lot of these. Opening low, closing high, meaning that it could be the start of a reversal, and definitely something to watch out for.
Yeah, all right, let's get to the last stock before we move on to some really good questions this week. We've got some rippers. Lend-Lease, I believe.
I feel like I should have to get the violin out for this one.
Yeah?
Just simply because it's like the Titanic, which is very sad to see. Will it provide a good opportunity at some point? Look, our pattern analysis indicates that it will, and it's coming right back to the all-time low price that we saw in December 1985. Now, there was one stock that Pedro was looking at. I think it was CLW, but I did differ in his view on that, because once a stock goes through its original low when it's first floated, to me, I just steer clear of it for a while. It can turn out to be a really good opportunity, but I want it to get back above that level before I'm interested in it. And look, this stock could turn out to be a great one to look at. Right now, we're seeing it heading towards that low. And through history, so many stocks that have bounced off those all-time lows tend to go sideways for quite a while and then make these long-term rises. But, this unfolding that we're seeing could be a long-term low for Lend-Lease, and could be over the next year or so. Maybe we'll see the bottoming out of that and then the next big opportunity. But if someone was holding this right now, I'd really feel sad for them. Just why hold a stock like that just because you think it's a good company? This is the argument we have over and over again, and why so many people that tell me that once they've done our course, they divorce themselves from that thinking altogether. There's no more dollar cost averaging. There's no more holding stocks until the death, because some stocks, they're big stocks, in a crunch could actually go under, and that's the real risk. It's not that often that we see that happen, but you can't remove it completely. I'm not saying this is what's going to happen to Lend-Lease. The pattern indicates that we could see a nice turn and a run eventually back up, and trend lines would be a really good guide on a monthly chart just to minimise that risk.
But better take the risk away, as you mentioned, play with the least amount of risk as possible. You know what comes to mind when I look at this one? Telstra.
I was thinking the same thing,
For a long time, big, strong company that
dog stock, and eventually
and kept testing those all-time lows, and now look at it. So maybe this is one of those ones, if you're looking for that really long-term play, at levels that you might not ever get 4 or 5 years down the track, but not quite yet. So let's move on, but before we do, let's get your favourites, Janine.
All right, my favourite would have to be, I have to go back and have a quick look because I've forgotten now.
That's all right.
Look, I don't mind Alcoa Corp after it's bottomed out. I think that would be an interesting one. Hang on, I'll go back to that one. If it holds the angle of that trend at least, or that pattern that I've drawn on there, and turns around and breaks out of the top of that, then I'd be thinking that one's a good one.
Yeah, nice. Pedro?
Look, I'm going to go boring on this one. BHP, big player, very cheap at the moment, and I think it's still got some great upside potential. Yeah,
fantastic. All right, now moving on shortly, we're going to get into our hot stock tip tonight, but first, let's answer your questions. Asila writes, I am watching these stocks at the moment. James Hardie around 25, Goodman around 25, and Suncorp around 15. I haven't bought any of these shares yet and would be planning to hold short to medium term. Please. All right, now normally we cover one stock, so we'll do Goodman this time, maybe send in one more email, Asila next week. Hopefully I'm saying your name right, and we'll cover it next week. But Goodman, Let's go with that one. What do you think?
We've been waiting for this one to bottom out because, I mean, it is such a good company and,
Right.
and the choice, sort of the jewel in that sector. The personality of the stock, you can see Acela has changed, and that's what we haven't seen that sort of move all this way up until now. And so this is why we have to be a bit cautious about it, but also keep it on the watch list just to see where it might go. It may actually find support on the angle of that line or close to it, but it also could come back closer to $20. That's the risk with the downside, the way it's unfolded at the moment. But I would definitely be watching this one and keep it on the watch list and looking at the right rules to actually manage yourself back into it at some point.
Yeah, looks very interesting. Pedro, did you want to add anything on that email there?
Yeah, it looks like very correctionary, if that's a word. It's had that pullback back up to the all-time high almost, but then it's corrected back down. So it's done that type of zigzag move that, and now it's broken that low. So at the moment, I'm not too excited about it. It could head down to that $20, like Janine said, or even lower to that 17, but that would be the limit, really. If it does get to that 17, I see very good value in this company. So at the moment, I just keep it on the watch list and see what happens.
Yeah, and just quickly to answer his question, he was looking short to medium term, which I've got no problem with. But when you're looking at, I find this is one of the things that, a lot of people that come to us especially is working the right time frame for the right, type of trade. And oftentimes I see people assigning a short-term strategy for a reversal type trade. And so you see that and it's like, well, there's no confirmation, and oftentimes you're buying and you're continuously getting stopped out. But waiting for that turn on the bigger time frame, I would suggest Acela, if you're looking to play that reversal game, would be one thing to do, and have a look at those big time frame charts to see, has it really reversed from this level, and then trade the hell out of it on the short term on the way up. That's probably my advice.
Sounds great. I mean, I guess you're right. Like when you're looking at people who are maybe not trained in how to pick the time frame, the analysis that we do actually tells you what's more probable to give you the better outcome. Because some people have thought, well, okay, I'm going to trade this particular stock short term, but until they've done I remember Dale saying to somebody who was trading short term, and I think they were really struggling with it, and Dale said, well, just turn up the time frame and trade on the weekly chart and you'll get a better outcome, and that's exactly what happened.
Yeah, for sure. All right, well, let's move on to the next one. Ramesh's email is next. Could you take a look at SHV? It's trading around a decent level of support and could be building for a nice move up. Would a buy at the high of the last monthly low at 366 be too risky? And where would you put a stop on a stock like this? All right, Janine, sounds like Ramesh is asking for the full trading plan, but...
A buy on the high of the last monthly low. Let's go in and have a look at that for you. Okay, so the last monthly low is there. 364 was the low, but he's saying a buy on the high. Is that right?
I guess so, yeah.
455. So look, there is some sort of... He's thinking about being strategic, I think, in terms of waiting for that turnaround, not trying to catch that fall. But it also shows a buy down at here, and I'm a bit confused. Because we wouldn't be trying to buy at this point, because this sort of pattern that's unfolding could actually turn into a bigger decline, and it could take out this low and could even head back to the low here. So that's why we don't try to buy stocks until they've actually confirmed direction, because if the big money's not putting their muscle behind it, why would you risk your money into it? So, and the big money will move it. They haven't got a choice. And so I think this level, this high you're talking about, around 450, is actually a really good level to look at for this stock, but it will depend on how it unfolds, of course, from here. So I suggest you actually contact us again, send in another email at some point when it starts moving up, but it could be one to watch, definitely.
Fantastic. All right, now Zach is next and writes, can I get your opinions on Challenger Gold? Wondering what your thoughts are on the technicals and chart setup. All right, Pedro, Challenger Gold.
Yeah, big reversal there on the monthly chart. It doesn't look too good. Let's go take a look at what's happened. Let's expand that out. And what I'm talking about is this. This March it's opened high, it's closing low. There's a what we call a reversal pattern there, which we do get into in the course. In detail. There's certain patterns that unfold by matching different bars, which are named differently, and they indicate a reversal in trend, and this is exactly what it's done. The only hope that I can maybe see is that if it does find some support on that longer term momentum there, but that doesn't give me much hope, because you can see even just looking at the colors. So this is blue. If you look at this last time that it did that blue bar, it actually continued down. But when you twist that bar upside down and you apply it in an uptrend, it actually reverses the trend to the uptrend. So now it's looking like it could possibly trade down. And when we go to the weekly chart, just seeing the way that these bars are already, you can see that this is quite an illiquid stock. I mean, when you're talking about a 13-cent stock, I'm not sure what his level of experience is with trading, but if you're not an experienced trader, I would say that this is not a stock for everyone. It does look like it's now maybe about to reverse, possibly to the upside, but is that a game that you really want to play when you don't know much about technical analysis? There's a lot more that we can apply on here, and we can definitely work out strong levels where it could find some support and resistance, but really, if you need to know what you're doing with this one. Another upside, I would say, is that the volume has increased in recent times. So there's definitely more attention on it and more liquidity, but it still remains a quite illiquid stock. So I would say a lot of resistance there around that 18 to 19 cents.
Yeah.
Until it breaks above that, really, not much more upside.
Okay, Janine, I know you're
all right.
itching to say something on this one.
This was Zach, wasn't it?
Yes.
Yeah. Okay, Zach. Now, I'm just looking at your stock. And like Pedro, first of all, it is high risk. So I agree with him on that front. I think that sometimes it's okay to have a stock like this in your mix of your watch list to add a bit of opportunity / experience. But one thing that I found really interesting in looking at this, because like Pedro said, it is only, a 10, 12 or whatever, 14-cent stock. So it's a penny stock. But the fall that it's had is sort of in line with what's happening with the gold stocks. It's not like it's actually plummeted to, to a complete disaster in this process, which you'd expect these smaller stocks potentially to be more volatile than their big brothers. Now, it is a little bit maybe here, but I can't quite see the close from this angle. But it's not disastrous in my opinion, and I actually like this trend that was unfolding prior to that move. It wasn't too concerning from the point of view of that it accelerated away beyond where someone might think is reasonable, and it's gone to a level that historically is really important where you would expect a turn to happen. And like Pedro said, if it goes above those levels there, it could be on another run. So I still think that I would keep this on the watch list.
Yeah, and volume's picking up dramatically, so that's another sign.
So there's interest there.
For sure, yeah. All right, you might have a good one there, Zach. Good job, mate. Now, Nick's email is next. I'd like to get your view on RMD. I feel like it's at an important price and need to see a bit more to buy. However, I feel it's close. All right, Pedro, is ResMed close?
Possibly. A lot of these are looking very similar. They've taken out lows, but in recent weeks, they look like they're reversing quite nicely. So let's get onto the chart and see what's happening with ResMed. And of course, this is another big company that has taken a hit. And what I was talking about earlier is that, it's taken out this low here of $32, but in this week, it looks like it's reversing. So we could actually see this be the precipice of a reverse for many stocks which have taken out those lows. So let's quickly take a step back and look at the monthly chart here to give an indication about what's happened. So this is a stock that's been in the market for a very long time. It has trended quite nicely ever since that low of 2012 all the way up to 2021, but now it's changing. It's become more volatile. You can see that it got sold off quite heavily down into the low of 2023. And then it's rose up actually from that low all the way up 100%. So that's it's a pretty good return for a company that has usually just trended quite uniformly in the space of 2 years. It's done 100%. So expect sharper moves This could be the low there if we're looking at this level, to be more precise, around that $30, because it was a previous support, previous all-time high. It could actually find some support. So I'd be looking at that $30 really for that strong reversal. I wouldn't be getting too excited about it right now. I mean, it could turn, anything can happen. But if that's the case, then you could possibly put a bit of a momentum on the way down to support that entry, because you can put those lines in the sand to justify an entry, but make sure that it's a repeatable type of rule, or else you can't fluke it all the time. But yeah, I do like the reversal here on the weekly. Again, like I saw with many stocks here, open low, closing high, not much volume supporting it. So I think that it could have that little bit more to go. So $30 would be my take, and it also fill that gap around there. So $30 is my level there.
All right, there you have it, Nick. Watch $30 like a hawk, mate. Now time to move on to our hot stock tip this week. Pedro, what is it?
All right, so our hot stock is Origin Energy, and this really comes off the back of everything that's going on. Everybody knows what's happening over in the Middle East, and Origin is a major gas producer, and they actually own a 27.5% stake in Australia Pacific LNG, which gives it direct exposure to rising international gas prices. And it's not only a passive play, they operate key assets like the Bass and Otway, and they continue exploring new reserves, and importantly, they're vertically integrated, and they're well positioned to capture any rise in gas prices. So that's a little bit of the back end story. Let's have a look at the technicals on the chart, because that's telling us a nice story as well. So let's start here on the monthly. We can see that it was much like you guys mentioned earlier with Telstra and LLC. It was falling for a long time, 2008 all the way down. I mean, you could say that was its low back in 2016, but it really failed to get any traction. That's the low before this recent rise in 2021. And it's just been, breaking new highs ever since. And you can establish a nice momentum there, and it's actually broken away out of that momentum at the moment. And you can see that it's looking quite differently to the stocks that we've been looking at. Whereas the stocks that we've been covering before, they're just about to turn, or they could be on the watch list. This one has already turned. And have a look at what the bars are doing there on the monthly. It's looking quite nice. So I would say that it is heading back up to around that all-time high, with the first level of resistance being around that $14.50. But knowing some further analysis, I actually think that this could be a $20 stock in the long-term future, let's say, all the way up to 2027, because of its gas exposure, really, and the way that they're positioning themselves, and the way that the chart is looking at this overall structure and how it's laid out. It really tells us a lot about where this stock is heading. So I would say $20 would definitely be on the cards. Let's have a look at the weekly chart here and have a look what's happened. So it's had its fall, it's had its reversal, higher highs, higher lows. It's closing on the high for this week. It's really wanting to push higher. I think that this one is about to break above that $13 and head up to that $14 in the short to medium term. So definitely one to watch. And I'll just finally put the final analysis there. $11 has been a very important level. It's bounced nicely off that $11. It said, yep, that's good value. We're heading up to that $13. So I think that this one is very, very hot at the moment.
Yeah, all right, definitely one to watch. And if you want more from us, check out our video, 8 ASX stocks to build a recession-proof portfolio. Bye now.